Good morning, everybody. So we're going to get started with the very first of our programming. Today we are joined by Scott Greiper, founder and president of Viridian Capital Advisors. He's going to go down a little bit of a kind of start for the day, and then we'll be moving on with the rest of our panels.
Good morning, everybody. What happened to the music, the MC? What's going on with this conference, man? It used to be full of spit and vinegar. Is that what it is? All right, guys. This is my usual Ignite It ex Benzinga talking about the Viridian Cannabis Deal Tracker and the flow of capital and the flow of M&A. And it's not as bad as you may think it is, but it's certainly not the heyday of the 2021 era. Okay, I don't think this is me. Guys, how do I get the slide up here, or the presentation? I could wing it, guys, because I've only been doing this 11 years, so I could do it in my sleep. But, oh, there you go. Okay. So we have, first of all, want to thank, obviously, Patrick and Elliot and Jason and the whole gang that is now IgniteIt.com. I think this is our 9th year participating in the conference, so grateful for that. Started Viridian Capital in 2014. We were the first investment bank M&A practice in the crazy legal cannabis industry. And then in January of 2015, we started the Viridian Cannabis Deal Tracker, which today is the largest database of every capital raise, equity, debt, M&A transaction, IPO, RTO, all the capital market transactions in the industry. We've been tracking and reporting on for 10 years now. So we've got a database of about $82.5 billion of every deal that's been done in the industry, globally, by the way, not just the US or Canada, but throughout Europe, South and Central America. So we put a lot of our resources and a lot of our staffing labor fees into our database because we have really a granular understanding about how deals are done in this industry. So we track everything. How many in here are subscribers or readers, or you get the, oh, great, thank you. So you guys either value our work or you delete my email every morning that comes in. Thank you very much. Appreciate the heads up. I think, been doing this for 30 years. I think data is how deals get done. Not only who's buying whom, but where and what multiples and what's the consideration. Is it cash? Is it stock? Is it earnouts? There's always a changing composition of deals in this industry. And we think it gives us and our clients a real advantage in the market. All right, I'm going to plow through this in about 5 minutes. Hopefully you guys can see some of this stuff. But we are at, despite the president's Truth Social posts now 4 weeks ago, all seniors should have access to hemp, and his announcement at some press conference 2 months ago that he's going to reschedule. I'm going to try to, does this work? No, that doesn't work. By the way, I am not an IT guy. How do I go back, Patrick? This is why Patrick Lane started this, so he could teach me how to go back one slide. Patrick Lane, everybody.
Hi, guys. Welcome.
Oh, it did go back. No, I need to go forward. Thank you. Okay. See that? Look how good you are. So I don't know how to use my pointer, but I will point. This is 2021. By far the high watermark in the cannabis capital markets, not only in terms of valuations, multiples of revenue, multiples of EBITDA, but the number of deals done over $500 million in size, highest rate ever in 2021. We've pretty much come down since. And even with the president's surprisingly support, who knows, for rescheduling and for access to hemp for seniors, we're still trading at the lowest multiples we've seen in 4 years. Don't really see this turning around. We're kind of off of the high growth phase of the cannabis markets. You saw the second and third quarter releases from the public cannabis companies, Trulieve and Curaleaf and GTI. The rate of organic growth now is in the low single digits. It's 1, 2, 3, 4%. So we're kind of off of that, growth curve in the weed market, and everybody's getting rich. It's become a much more fundamentally driven market. Performance matters. And we think because organic growth has slowed, like in any other industry that's going through kind of a top off of a high growth phase, you naturally see consolidation. And as you'll see in one of the titles of my slides, consolidation is an opportunity for cannabis companies to supplement slow organic growth with faster acquired growth, and that's what we're starting to see in the market. So this is of the last year. Year-to-date capital raises down about 8%, still about $2 billion in size, so there's money coming in. By the way, this is a slide that goes back to 2018. All capital raises all over the world, US, Canada, rest of the world, public and private. These charts are made by our senior analyst, managing director, Frank Colombo. So I have a decent understanding of the slide, but that's taken me 11 years to understand Frank's slides. You could try to figure this out, but you can clearly see the amount of capital in the last 3-4 years, way down from 2021. I don't see it getting back there ever. Until either federal legalization happens, I'm dead by the time that happens, or somehow federal reform happens that starts to cut into the illicit market. Otherwise, we're kind of a tapped-out industry in terms of top-line growth, at least for the big pubcos. Third point here, debt as a percentage of capital, highest rate ever. What does that mean? To me, it means lenders are coming in because they see companies with sustainable cash flow, hard assets, collateral to lend against. Where's the equity? Equity investors chase returns. They chase upside. They chase growth. And that's not really available in at least the big pubcos in the industry, as you saw from second and third quarter releases. The rate of organic growth is in the low single digits. So the equity investor has kind of left the marketplace. What are they investing in? The lenders have come in, and thank God for that. So not only are we seeing record levels of debt coming into the market, the majority of that debt is refinancing. It's not new capital. So for the top 15, 20, 25 public companies, which are sucking up all the capital because they're big, they're public, they're liquid, they're generating profits, the lenders are going there. Size matters to them. So equity is kind of disappearing because we're not really in a growth phase anymore. Debt is taking up that mantle. 1, 2, 3, 4. Fifth bullet point, raises from outside Canada and the US, the highest level ever. Still a small portion of the overall market, let's call it 10, 11%, but the first 5, 6 years of when we started to track this data, the amount of capital, the amount of M&A, the amount of transactions overseas was under 4 or 5%. It's now 11.8%. And the overseas markets, particularly Germany, the UK, are attracting equity capital because they are in a growth phase. I kind of equate it to where the US market was in 2016, 17, 18. So the US public players, Curaleaf being the front end of that, are going into Europe, have been going into Europe, and acquiring companies and investing companies, and that's really the growth engine of the global cannabis market, Europe and the EU. Moving quick. So this is the kind of point I'm making here, is that when you have a fairly large CPG industry, any industry, that's 10, 12 years into its growth curve, from an emerging growth industry to now a mature industry, you're going to see consolidation. It has to happen. 2 primary reasons. The bigger players, the public players, their organic growth rate is almost nil. They got to go out and buy growth, number one. Number two, you're looking within states, Michigan being the top of that, California. You're seeing interstate consolidation as the leading single state operators start buying up their competition to solidify their dominance in state. So as a firm that does primarily M&A right now, we're not raising too much capital. This is a good thing for the industry. It's a good thing for us. Consolidation is not only happening where the bigger guys take advantage of the smaller guys, the better performing companies swoop up the worst performing companies. They have to acquire, particularly the public companies where you have to feed the beast being the public shareholder. You got to show growth. You got to have revenue growth, bottom line growth, and in many cases now, that's being acquired, not built. So we think the M&A landscape, we'll talk about this later on in our M&A session, is poised for the next couple of years to be the primary source of capital markets deals, at least in the US. This is, for all of you that have been in the capital markets over the years, there's always this valuation arbitrage between public companies and private companies. That's why in most industries, most acutely in cannabis, 9 out of 10 M&A deals have been public buying private. And that's what this is showing. There's still a valuation gap between the larger public companies, the smaller public companies, and the private companies. So you're going to continue to see the large public companies driving M&A activity. I got 28 seconds left. So this is my, excuse my language, what the fuck slide. So on the right side, you see that the best performing public companies have been the Canadian public companies, the Canadian licensed producers, big and small. What the hell is that? Canada is the size of California. It's not a big market. It's not a big domestic market. Yeah, they're exporting a lot of goods to the EU. That's great. But you want to see what can happen to US companies in a friendly, maybe even legal cannabis environment? Go up to Canada. Why would these smaller companies serving a much smaller market than any of our US players be outperforming the largest US MSOs? It's a federally legal jurisdiction. That's it. I don't know if anybody from Canopy Growth is here, but if they are, it's a company sucking wind. They continue to raise as much money as they want. If they were headquartered down in the US, they'd probably be dead. But they're trading up in Canada, federally legal, institutional players. You can raise as much money as you want. This is the future of the US cannabis market if we ever get real federal reform. With that, handing it over. Thank you, everybody.